What is a cash ISA? How do they work? Is it the best thing for your savings? All great questions, thank you for asking. If you're curious about any of the above, then this video is for you. Over the next few minutes, I'll explain what cash ISAs are, how they work, and end with a short checklist that you can screenshot to help you decide if a cash ISA is right for you. The main difference between an individual savings account or ISA and a standard savings account is, with an ISA, you don't have to pay tax on any interest you earn. Naturally, you can't just not pay tax on an unlimited amount of money, so the government has capped the amount you can pay into cash ISAs each year at £20,000. This is what's known as your tax-free allowance, and it can be split across different types of ISAs, including a cash ISA throughout the year. I'll talk more about this later. A cash ISA, unlike a stocks and shares ISA, is one of the more basic ISA types, so let's take a closer look at how they work. With a cash ISA, you simply pay money into your account up to your yearly allowance of £20,000 and then earn interest on that balance at the rate set by your ISA platform app or provider. You can choose to pay in money via ad hoc or regular scheduled payments like a direct debit. Most providers will calculate your interest daily and then add that total to your balance every month. Choosing a provider that adds interest regularly rather than in one lump sum at the end of the year will help boost your savings even further, as you'll earn interest on your interest throughout the year. There are three main types of cash ISA you can choose from, and they're fairly self-explanatory. An easy access ISA gives you easy access to your savings with no limitations on how and when you can withdraw your money. A fixed rate ISA works by locking in a set interest rate for a certain number of years. These can be a great option in times when interest rates are unstable, but they do come with the caveat that you often can't withdraw your money until the fixed rate period ends. Notice ISAs are sort of somewhere in the middle. You can get access to your savings, but as the name implies, you'll have to notify your provider in advance before making any withdrawals. You can only pay into one cash ISA a year, but you can pay into several different types of ISA. For example, you could pay into a LISA, a cash ISA, and a stocks and shares ISA in the same year, but your £20,000 allowance would be spread across 3 accounts. Before you start slinging money into a cash ISA, first have a good old think about whether an ISA in general is the right thing for your savings. Consider your savings goals and then think about which money product would best support them. In the same vein, think about which type of ISA will best support those same goals. A cash ISA could be a great option for someone who just wants a basic, no-frills savings account that they don't want to pay tax on. Consider whether you'll need easy access to your savings. This will also influence the type of account you go for. The higher the interest rate, the more money you'll earn, so keep an eye out for decent rates. And finally, what are the transfer T's and C's? If you like to change accounts each year or want to consolidate an ISA balance, make sure you know if and how a provider allows you to do this so you don't unnecessarily eat into your tax-free allowance. For more information on cash ISAs, check out our full guide on finder.com by clicking this link here. I've also put links to a whole bunch of ISA guides in the description below, so you can read around which one is right for you. Give us some love below by liking and subscribing, and hit that bell button so you don't miss out. Thanks for watching.